Welcome back, and joining me with more insights on the day's trade is Annatjie Van Rooyen from Regenesys Business School. Annatjie, thanks so much for your time today. Maybe let's start with what you've made of trade so far this week. I mean, it's been a busy week. Off air, we said there's a lot of nothing actually happening, but there's still a lot happening, right? We're seeing that the U.S. government shutdown entering its 10th day. Rising bets for rate cuts come close to the end of the month off the back of the Fed minutes we got this week. Gold on a tear, yes, pulling back, but still above that $4,000 mark. So what have you made of trade and how that's filtered through into market action?
Good afternoon, Annatjie, and thank you for having me on your show. Yes, the JSE All-Share Index is certainly letting off some steam at the moment, and this is on the back of a firmer US dollar that has more to do with weakness in the euro and the yen, really, than strength of the US dollar. And this is, as you have mentioned, that US government now enters the 10th day of being in a shutdown. So gold, we've also seen gold retreated. I think that's because of the stronger US dollar. And also there's been a ceasefire between Hamas and Israel. But I do think that the gold price will remain supported by expectations of lower US interest rates. Safe haven demand will continue, and the demand for ETFs and central banks, I think, will continue to buy. So I think in the gold market specifically, nothing wrong with banking some profits, but I do think that the dips are still buyable. Then in terms of next week, we're looking forward to quite a busy week on the US market because that third quarter earnings for the banking companies are kicking off. And for the S&P in aggregate, we're looking for 7.9% earnings growth for the third quarter. So next week, the action will definitely start. You've also asked me about the government shutdown that unfortunately is affecting the CPI release, or it might reflect the CPI release for next week. But there is talk that they might recall some of those workers to actually ensure that we do see that release. But regardless of that, the markets are pricing in another rate cut by the end of October.
So just sticking with local markets for a bit, as mentioned, local markets have been on a tear, but we did see, a pullback towards the latter part of the week. And the tear, of course, being limited to certain sectors, precious metals, as well as the likes of a Naspers and Process. Now, with the rotation we're currently seeing into emerging markets, Annatjie, do you think we'll start seeing, some interest in the SA Inc. players? Or do we still need to see some real growth here at home, some confidence here at home for those stocks to be, more attractive to traders?
Yes, look, we have been seeing upward revisions to economic growth for the South African economy, which is positive. And if you look at our lower inflation target, which is currently being anchored, and lower inflation expectations, higher real interest rates to remain here for longer, that is a huge magnet for foreign capital. So it provides a huge underpin to the bond market as well. So I do think that the SA Inc. stocks still offer very good value, but we do need to see better growth coming out of South Africa. But it is slowly starting to happen. We are seeing improvements in some of the SOEs, and especially Transnet and Eskom, and that's very important for our economy. So I do think that emerging markets, and especially South Africa, will benefit from these turnarounds in the SOEs and attract more capital into the local stocks, not only the stocks that everybody usually goes for.
Now, looking at the stocks that everyone has been going for on the back of the higher gold price, we've seen an interesting turn of events, especially in the PGM counters that have also been making gains on the back of the higher platinum price. I also noticed today that the PIC picked up more of Sibanye Stillwater's shares. I think their stake now sits at around 20%. Are we seeing a shift when it comes to those counters, particularly when it comes to, institutional investor interest?
Yes, we all know that the PGM stocks have underperformed for a very long time, and then gold led the way, and then all of a sudden the PGM stocks just followed suit and almost started acting as a safe haven. But with increased global interest in battery metals, clean energy for their catalytic properties, and precious metals as safe haven assets, plus increased industrial demand for PGMs on the back of stronger GDP numbers, especially from the US very recently. Having that increased stake in Sibanye may position the PIC to benefit from a whole lot of these tailwinds. So it does make a lot of sense, and I think this time of the year, going into the last quarter, people are rebalancing their portfolios and looking at their asset allocations, and it does make sense then to increase your holding to the PGMs.
All right, before I let you go then, let's get to your stock pick. Where are you seeing opportunity at the moment?
Look, with the third quarter earnings that will be kicking off next week, I'm going to go with Intel. They'll be releasing their results on the 23rd of October. And the reason why I'm picking Intel, I know it's already up 44% for the year, but I'm quite excited about the growth prospects for this company based on the fact that SoftBank has taken a stake, the US government has taken a stake, and more recently NVIDIA has also taken a stake. So I suppose, it's all about the execution now, but I'm thinking if they have a positive forward-looking statement, we might see another wave of buyers coming into that market. So I'm not writing the AI stocks off just yet. I'm still bullish on them.
All right, let's leave it there. Annatjie, thanks so much for your time and taking us through trade today. And that was Annatjie Van Rooyen from Regenesys Business School.